Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, Yellen is running out of cash. Huge implications for the markets. We're going to get into all the details today. So let's dive into this video.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
So Bob, Yellen I think she's about a week out, and then she's totally out of cash. What's your take on what's going on here?
Yeah, I feel it. Actually, it's the real story is not so much her running out of cash. The real story is when she replenishes the cash.
Right.
And so what we have is a situation here now where she ran this treasury account down to nothing. Throw this chart up because we're going to tell two stories at one go here. So what she did here, Phil, was she went ahead and she she's been subsidizing the stock market for the last 6 to 9 months because she just drained down. She had a huge war chest, to be able to run the government, but they chose to spend it to basically push liquidity into the banking system, which then found its way right out into the stock market. And now that she rode this thing down to zero, no surprise that the negotiations are going well. If you notice that conversation, and probably by Memorial Day weekend, you know what they're going to do? They're going to milk this thing, Phil, right into the Friday of the long weekend, so they can keep trying to grind this market up. But when she's done, if you notice that red line there on the chart where it says September TGA target, that number was 600 billion. Now it's at 772 billion dollars. So if you take essentially nothing in the checking account and you have to get to the September target of 772 billion dollars, that is a massive amount of liquidity. It's going to come out of the banking system. When that money comes out of the banking system, interestingly, in the past, I didn't want to go in that article and just put a bunch of paragraphs out there. Just trust me when I say this. Typically, in these situations, the money that funds the government actually comes out of money market accounts in the past. And so you don't see as dramatic of a pull of liquidity as you normally do because it doesn't affect the bank reserves. But this time, retail is buying treasury bills, and they will actually suck money out of the banking system. So they're going to continue to drain the reserves along with Yellen instead of it being kind of like a seesaw, Phil, if that makes sense.
Yep.
Coming out of one pot into another, but inside the reserves. This time, retail's drawing out to buy bonds, and Treasuries is buying bonds and taking money out of the banking system. And people always says, well, how does that happen? Well, money has to come from somewhere. And with the Fed doing QT, the Fed is not providing the cash, okay, the thin air, if you will. So it has to come out of somewhere, and it's going to come out of the stock market. And we're looking at probably a really, really, really opportunity for a nasty collapse in the markets because today we're talking on Thursday here. You're already starting to see it. The dollar's up, Phil. The TLT, the bond market is getting crushed. They know it's coming. Okay, they know Janet Yellen's. The drug dealer is out of drugs. And she has to run back to Mexico to get some more fentanyl, So now they're in a situation, and they put the VIX to the floor. I mean, they did everything they possibly could do, Phil, to try to make the narrative is that everything is okay, but it's going to be just the opposite. And the ironic thing about all this is that I had another chart. You probably didn't pop it up there with the two big circles. because of the money market accounts have over $6 trillion in it now, the Fed's going to have no choice because they don't want to lower interest rates. They're going to have no choice but actually to start up a QE operation after this debacle that Yellen's going to put in. So we're literally going to be swinging hard down, but then we're going to start giving the signal to Bitcoin, gold, silver, commodities that we're going to be debasing the dollar. And in essence, because the Federal Reserve is going to come in and try to goose the banking system. And then the last time they did that, the stock market, this was after the 2018 sell-off, Phil, you remember that, is that in 2019 they had a 10% pop in the market. So I'm looking for a pretty good pullback in the markets. I mean, in 2022, we got a 22 or 29% pullback. The signal that we shared earlier this week was between a 15 and 30% pullback. So I'm looking for a pretty hard V operation here. A V down, a V up, but not quite as high. And then when that all bounces out, then we're going to be looking at, the recession and see where the stock market takes us from there. So that's where I'm on that. There was another chart that I just threw at you, and you didn't get a chance to throw it in there. But this is from one of the, the options guy, one of the quant guys, and he just said people are absolutely insane if they think valuations of equities are going to maintain with the Fed have interest rates at these levels. And once there's a recognition that he's not going to roll over, then they're going to have to simply revalue the price of equities. And we're going to have even a bigger pull higher on interest rates. And so that's going to start nagging on the markets too. So, it's going to be a buckle up buttercup kind of ride here, Mr. Toad's Wild Adventure at Disneyland, okay? And it's not going to be fun. So I'm going to throw it back to you, if you think it's just Bob and Phil saying this stuff, this is known stuff. Anybody that's been in the financial markets for a long time knows what's happening now is the pump before the dump. Okay. And look at they're pumping, they're barely getting the markets to move. It's the same 10 stocks. Underneath it, the commodities are already collapsing.
And I'll bring up another chart. So this is the TGA balance as you were showing, but relative to the SPX with SPX overlaid on it. SPX is in orange. And so you can see the kind of inverse correlation that they have, right? And we're in the same situation that we were in the first quarter of 2022, which basically was when the bear market really started to roll over and go down. And if you look, this chart will update later today. And this line, this is her balance, is going to be a lot closer to the red 0 line than it is here because she's drawn down. She's now under 100 billion, which is on fumes historically for the treasury balance. And that's why I think, everybody's like, oh yeah, we'll get a deal done. But what that does is it puts us in this situation similar to the Q1 2022. And then she's going to have this huge increase, right, in the TGA balance. And you can see what happens with the stock market. It's a big negative effect on that. It's sucking all the liquidity out of the markets, forcing it into treasuries and bonds and things like that. So to Bob's point, it's going to be pretty bearish for equities going forward. And we already have a ton of data under the hood telling us that, a recession's incoming. You guys will see that in the upcoming videos. So you have to be very careful here. And it's actually kind of a nice thing because you have, basically a huge clue here, a huge roadmap as to what's going to happen going forward. So you just best be prepared. And if you're long here, hedge yourself. But it's not a bad place to go to cash or just take some defensive measures. Puts, you can even short micro futures if you don't have a big account or mini futures if you do. But there's things to hedge the drop here. But I think it's pretty clear what's coming, Bob.
Yeah, look, it's simple math. The government's not going to balance their budget. So, that's $770 billion. That's just a down payment, guys. Once she gets that done and they spend, we're going to go right back in the same situation in October. So all she's really going to do is fund the government. Her balances are going to, even though they're going to go up, she's not going to have the same war chest she had last time. And we're going to go right into the battle again for the budget. And then once that's done, then they're going to have to fund the government again. And so it's going to be more than $700 billion because we're running a $2 trillion a year deficit, Phil. It's just mind-boggling to me.
It is.
And the fact that other things aren't moving yet, just, hats off to these guys. Once this dam breaks, I don't know if I want to be downstream.
Yep. All right, guys, well, that's going to do it for this video. Let us know your thoughts on that and what you're doing to prepare for a potential market drop. As always, we love it when you hit like and subscribe. And if you can smash that notification bell, that would be awesome as well. Set that to all, and we'll see you on the next video. Take care.
Trade